All right, bro, we are live on YouTube. This is the 722 project and Dr. Chris Cole, I am. We are on class number 5, class number 6, with trading fundamentals or trading basics with Dr. Chris Cole, bro. You got it. All right, bro, we are live.
All right, class number 6 of Trading Fundamentals with Dr. Chris Cole. Tonight, I'm going to introduce the concept of, some may call it order blocks. I like to call it institutional zones, right? And what I mean by institutional zones, or where you hear people talk about order blocks, is where the banks or the big money has manipulated the market on purpose in order to take it in their desired direction. Okay. And the fact of the matter is, this is when we talk about support and resistance in the market, this is what I use as support and resistance levels in the market. When I'm trying to identify support and resistance levels in the market, I'm always looking to identify areas in the market where there has been big money or institutional manipulation in the market going on. Okay, because the fact of the matter is, price is never just going to move in one direction forever, no matter what time frame you look on. Okay, it's always moving where either up or down. Okay, just like a ping pong, right? It's going back and forth between supply and demand at all times. Now, what gives us an edge, or what adds to our edge in the market, is being able to see where the institutions have manipulated the market, or they decided to move the market between what? Supply and demand. Okay. When banks and institutions want to move the market, they just simply can't move it, right? Because every buyer, there needs to be a seller. For every seller, there needs to be a what? A buyer in the market, right? And when we start talking about institution and big money order flow, we're talking about an abundance of money, right? So these institutions and these banks and the big money, they do what? They manipulate the market in order to do what? Get all of their orders in the market. For example, if the institutions want to take the market higher, right? In order for them to get all of their buy orders in, right? One strategy or one tactic that they use time and time again is they start introducing sales to the market. So you start seeing large sale orders come into the market. Okay. Now, what happens when you start seeing large sale orders into the market? Well, you get the slow money or the dumb money or the retail money in the market, and they start to do what? They start to sell, right? And as the market is selling off, what? Prices getting lower. Well, guess what? The institutions have manipulated the market by introducing sales only to do what? Create an opportunity to buy and move the market higher. Okay. Now, why is this important? Okay. They introduce sellers, okay, thus increasing the supply, right? Or the ability to do what? Create buy opportunities in the market. And the second part of it is, as they move the market lower, they can get their buy orders filled at a what? Discounted price, at a cheaper price. Okay. And these areas are left behind on the chart. We can see them if you know exactly what it is that you're looking for. Okay. And again, we already know that the larger time frames rule and run the market. Okay. So when I'm going to do my daily analysis, or I'm looking at particular levels in the market, I start and I'm looking for my support and resistance levels. I look for my 4-hour. I start with my 4-hour time frame, go down to my hour, and then refine it on my 30-minute or 15-minute time frame to get very precise support and resistance levels in the market. Okay. And after you see this over and over, you get repetitions under your belt of constantly marking out these institutional zones, you'll see where these give you high probability opportunities to trade. Your edge, it gives you points of interest in the market for your edge to potentially show up and for you to take high probability risk to reward trades. Okay. So I'm going to break down gold in this particular video and show you how to find your institutional zones on your larger time frames and how to refine them on your smaller time frames to start to find pinpoint entries and support and resistance levels in the market. Okay. All right, so here we have a 4-hour chart of gold. Okay, we got a 4-hour chart of gold. Okay, 240-minute GC 1222 gold futures market. Okay, now if we look at this particular chart, our 4-hour chart, we can pretty much say that the market is moving in a downtrend. Okay, we can pretty much say that the market is moving in a downtrend. And if the market is moving in a downtrend, we see price moving lower, right? And we see what? More red bars or more red candles appearing, right? Than green candles. Okay. So now how do we take this information and we build out supply and support and resistance zones? Okay. Well, in a downtrend, it's very easy. I'm looking for random green candles. Okay. I want to take a look at the last green candle before the downtrend commenced. Okay. And then I want to mark out another random green candle before the downtrend continued. And my last green candle before the market continued to go lower. Okay, so we had this green candle take us all the way down to this point. Market moved back up. Had this green candle take us down here. Market moved up. And this last green candle essentially took us down to current price. Okay, so this is why I marked those particular zones. Okay, now that's on my 4-hour. Okay, this is a large area because I'm looking at what? Larger time frame. So what do? I now go from my 4-hour time frame to my 1-hour time frame. And wow, look, I start to refine it, right? So these boxes or these spaces came from what? My larger time frames. But once I zoom out, I now can do what? Refine it. Let me clear this off. Refine my area to this last green candle. Now look how much risk I've taken off just by doing what? Refining my zone. Now my true institutional zone is there, right? Now my true institutional zone is where? Is here. And last but not least, let's go to the 15-minute to see if we can refine it even more, right? Become even more precise with our zones. Okay, so when we start talking about patience and discipline, right, and reducing risk, okay, and that one is pretty good there. Okay, so now I have my refined support and resistance zones. Okay, I know that the market at some point is going to come back and do what? Retrace and test these levels. Okay, because guess what? The institutions bought the market here. So these buy orders are still open in the market. Okay, so at some point, what? The market has to return to what? Mitigate or close out most of these buy orders. Okay, it has to come back and mitigate and close most of these buy orders. Okay, and it doesn't matter. Again, it doesn't matter if you trade in futures, if you trade in stocks, options, or whatever the case might be. Learning how to spot, identify, and refine institutional order levels is going to take your trading and especially your risk management to the next level. So I wanted to put this video together to introduce to you the power of institutional zones, the power of institutional manipulation. Later on down the line in the courses, I'm going to teach you how to implement these in strategy, execution, and how to take these institutional zones and stack the odds or increase the edges to put you in a position where you are highly likely to be profitable, and most importantly, be able to execute trades in a way where you can absolutely reduce your risk. Okay. Appreciate you all for tapping in to class number 6. Make sure y'all follow us on the 722 YouTube channel. Make sure you follow us on Twitter at 722p, myself on Instagram at Dr.ChrisColeIAM, and on Twitter at ChrisColeIAM. I appreciate you all, and we'll be back for class number 7, which is going to be your first introduction into risk management and the importance for understanding risk. Peace.